Hey, ready to dive into Titan's Q3 FY25 earnings report? I'm seeing a solid 25% revenue growth, which is pretty impressive.
Absolutely. It seems like Titan had a strong quarter, but we need to dig deeper to see the complete picture. First off, Titan, as we know, is a joint venture between the Tata Group and Titco. They're big in watches, jewelry, and eyewear, with brands like Tanishq and Titan Eye Plus.
Right. And they've also expanded into fragrances and dress wear. So tell me about the financial highlights. What should we focus on?
Well, the consolidated total income hit 17,723 crore rupees, a 25.5% jump from last year. However, the profit before tax was almost flat, around 1,396 crore rupees. It looks like a change in custom duty on gold impacted their profitability. So it's not all sunshine and roses.
That custom duty impact is definitely something to keep an eye on. Any one-time events or non-recurring items we should be aware of?
The report mentions that the custom duty related losses on inventory have been fully realized this quarter. So that's why the profitability is lower. I mean, they're normalizing for that. The EBIT margin for the jewelry division would have been 11.2% instead of 9.5%.
Okay, good to know they've addressed that. Now let's break down the business segments. How did each perform?
So jewelry saw a 26% growth. Watches and wearables were up 15% and eye care grew by 16%. But the emerging businesses, including Taniera and fragrances, only grew by 5% and actually recorded a loss of 32 crore rupees. Now,
Interesting. Jewelry is still the star then. What about the international business?
but the international jewelry business had a great quarter with 64% income growth, mainly from North America. It's like they're really tapping into new markets. I guess that's a good thing for growth.
Definitely. Now let's switch gears to the balance sheet. Any red flags there?
From what I can see, nothing too alarming. We'd need to dive deep into the full balance sheet to give a thorough assessment. I mean, the debt to equity ratio is at 0.73, which is something to monitor.
Got it. What about cash flow? Are they generating enough to cover their expenses and growth plans?
The report doesn't give us a detailed cash flow statement, but it seems like they're investing in growth, especially in emerging businesses. It's like they're planting seeds for future harvests. So, we'll need to watch how those investments pay off. Disclaimer. We advise investors to check with certified experts before taking any investment decisions.
So, what are the key financial ratios telling us?
The operating margin is around 8.85% and the net profit margin is 5.90%. The debt service coverage ratio is at 0.42, which is low, so we need to understand that better. The current ratio is 1.36, which shows they can cover their short-term liabilities with their assets.
That's helpful. Are there any notable trends we should be aware of?
Well, the jewelry segment is consistently driving growth, but the emerging businesses are still struggling. It's like they're trying to diversify, but it's not quite paying off yet. Also, keep an eye on how the custom duty changes affect profitability in the long run.
Okay, let's talk about the outlook. What does management expect for the future?
Management seems optimistic, expecting good growth for the fiscal year, and they're committed to investing in their emerging businesses. It's like they believe they can turn those businesses around with the right investments.
What are the potential risks or catalysts that could impact their future earnings?
Market conditions, regulatory changes, and competitive pressures are always there, But the biggest near-term risk seems to be gold prices and any further changes in custom duties.
Right, those external factors can definitely play a big role. So let's wrap it up. What's your overall assessment of Titan's financial health and outlook?
Overall, Titan seems to be in a good position with strong revenue growth, especially in the jewelry segment. I mean, the custom duty impact is a concern, but they seem to be managing it well. The key will be to see how their investments in emerging businesses pan out. It's like they're at a crossroads, deciding whether to double down on what works or venture into new territories.
Makes sense. Any final thoughts for investors?
Investors should keep an eye on the jewelry segment's performance and the progress of the emerging businesses. I mean, also watch out for any news on dividends and any record and payment dates that could affect near-term returns.
Excellent analysis. It's been a great conversation.
Absolutely. Always a pleasure to dissect these earnings reports.
Before we sign off, this is a quick reminder to our listeners. Please like, share, and subscribe to our YouTube channel for more in-depth financial analysis and insights. We really appreciate your support.
Yeah, we have a great time doing this, so please subscribe.